Hedieh, thank you so much for being with us. We have worked with you for a while now, and all of your content and books and everything that you put forward, project finance related, we are very sort of impressed, and it's really great to have you with us once again. I would love to hear where everybody's joining us from today. So feel free to let us know in the chat. You can also use the chat for any questions during the session, or you can leave them towards the end. We should have plenty of time to answer some of your questions. I can already see Kevin joining us from India, Nate from London, Emiliano in Spain. We have Sean in Trinidad and Tobago. Very, very good to see people joining from all over the world. Cyprus, South Africa, Hedieh is in Paris, Andrew in Portugal. That's amazing. Thank you guys for being here. Hedieh, I will let you quickly introduce yourself, and then I'll continue admitting people as they join the meeting, and we should be ready to start. Thanks once again for being with us.
Sure, thanks for the introduction. And can I share my screen now?
Of course, yep.
Perfect. So let me share my screen. So thanks everyone for joining. So today's discussion. So before I go into today's topic, just to tell you a little bit about myself. Before doing what I do today, I started my career as a trainer, and this was the time when I was answering people's questions. And in 2010, I joined the African Development Bank as a consultant, and that was the time when I had to really put my answers in practice. And that was basically another way of learning, is that learning by doing, as opposed to getting answers from questions. So I had the experience of the two. And so today what I want to share with you is how I do the review of my project finance models. But so T, are we ready to start the session, or shall we still wait for others to join?
Hedieh, yes, we are. I think it's good to go now. Just wanted to let you know that we can currently see the presenter mode of your presentation. Not too sure if you wanted to go full screen with the slides.
Yeah, I think I have a problem with my screen. But I hope it's not going to be a problem, because we're going to shift to Excel.
Yeah, that's fine. That's fine, as long as you're okay with that.
Yeah, sure.
We are ready to start.
All right, so before I get into the topic and show you a financial model and how I would do the review, I would like you to take a test with me. So we're going to have 3 questions, and I'm going to first tell you the story, and then based on your answers to these 3 questions, I'm going to basically tell you what type of financial modeler you are. So the story that I want to tell you is, imagine yourself, you wake up in the morning, you start working, and you receive an email. And in the email that you receive from a client, they are asking you to review a financial model, the assumptions, formula, calculations, and everything, and also provide your recommendation for improvement. And you have not heard of this project before. It's the first time that you hear, of such a project. And so the only information that you have is this email and a financial model that is attached to it. Okay. So these 3 questions that I'm going to ask you now, Tia, I don't know if we can launch the first one. So there are multiple choice questions. So the first one, the question is, are you able to review the model using the information contained in this email? So see whether your answer falls in yes, I can review the model. Answer 2, no, I cannot review the model and I will not even open it. And the third one, I need additional information, but I can do a limited review. All right. Let's give a couple of more minutes. I think we can go to question number 2.
Just waiting for, I think, a few more people who haven't answered.
All right.
But yeah, I think at this point we have over 75% of the people who have responded. So I will end this poll and go to the next one. Question number 2.
So,
and then whenever you're ready, Hedieh, we can also share some of the results.
Sure. So can we share the results at the end? Yeah.
Of course.
Perfect. So question number 2 is, at what level can you go deep in your review? A is you do a detailed review of the assumptions, formulas, and calculation. And you can also do analysis. 2, I cannot review the model since I don't have enough information. And 3, I will do a mechanical review, design, and structure. Just pick up the first answer that comes to your mind.
Great. Should we go to the third question now, Hedieh?
Sure, let's go to the third one. The last question is, you open the financial model and you see a pop-up message telling you that there are circular references in this model. What is your reaction? First one is, okay, I can work with that. B, I'm unsecure and I'm unaware and unsure of the implication of the circular reference, so I don't know for now. The third one, I will take a note as an issue to be dealt with. All right, so I think we have now the answer to the 3 questions. So now, based on this answer, you will know if you are in category A, B, or C. Can we share the results, T, please?
Yep, so this
Perfect.
Everybody should be seeing the answers to
Right.
question 1.
Okay. Perfect. So we have a majority group C. So now I will tell you what is my interpretation of all this. So if most of your answer falls in category A, I would say that, you're a people pleaser. I mean, this is a personality test as well. So why do I say that? Because, look at the 3 questions that if you remember the 3 questions, the first one was asking, can you do a review of this model and at what level? Yes, you can do a review, but you cannot, if you don't have enough information about the project, you will not be able to do a complete review. Can any of you, on this session today, give me an example of why it is important to have a background story before we even look at the financial model? If anybody has a story to tell. Do we have someone who want to tell why we need to have the story before we do a review of the model? Or can we just straight go and do, the checks and, come up with the analysis? Think about it, there are many examples. For example, the first information that you need is at what stage is this project? Is this project, during feasibility stage? What is the purpose of this model? Do we want to get a tariff out of this model? Do we want to size the debt? Do we want to sculpt the debt? And what is the financing structure? Is it project finance? Is it corporate finance? So most probably you will get an idea from the model, but you need to have the information. And who are the people involved? What are the contracts that are signed? These are all the information that you need before you can go and even look at the financial model. Because if the project, for example, is at construction phase, then you know that you need some actuals, right? A combination of actuals and forecast. So these are the things that you should know before you even start your first review of the financial model. So yes, if you're in category A, I would say you need to really start thinking deeper about financial modeling and the review of financial models. And if you're in category B, then I would say that you're too harsh, you're too harsh. It seems that you don't enjoy the work that you are doing, because you can at least, by looking at the model, you can at least have an idea. A financial model is an important document that is gathering and collecting all the inputs, all the parameters that, are around this project, all the contracts, all the information is basically within this financial model. So of course you can get, an idea, and you can have, some recommendation. So I would say that you're too strict, and you need to really, enjoy, a little bit more, working with models. And if you are in category C, which most of you were, then you are what I call a financial model detective. And what do I mean by a financial model detective? In my opinion, a financial model detective is the one who is flexible. Why? You have to be flexible so that you can judge whether a tool is flexible or not, because we know that one of the pillars of the standards, in financial modeling is flexibility. And it's a very delicate topic, flexibility, because you know that there is a trade-off between flexibility and simplicity. We want our models to be simple, but at the same time, we want them to be flexible. So you need to have this judgment of what are the flexibilities that you want the model to include. You cannot put all the flexibility in. It's going to make, the model too heavy. It's going to, increase the running time. So this is really something that you need to be very careful and understand. And that is why I say a financial model detective is the one who is flexible. A financial model detective is also appropriate, A for appropriate. And meaning that it wants to do things right, wants to understand things before, he or she jumps into conclusion. And that is what I call, appropriate in terms of a financial model detective. Structured, such an important adjective, because we want this tool to be structured, and this is very important. So you need to have, an idea of what a structured tool is. And that is why I always see like people with engineering backgrounds, they are very good at financial modeling because they understand, the importance of structure. And lastly, transparent. Our financial models need to be transparent, and this there's a very good reasoning behind it, because this is a tool that is providing a lot of information and a lot of output. You're sizing your facilities based on that. So you need to have a tool that is transparent, and in order to be able to provide this transparency, you yourself, you need to have this quality in you. So this is so far an introduction. Before I get into the review of a financial model, let me know if you have any questions so far, so that we can, answer together before we jump into the Excel. Tiao, do we have anything in the chat?
No questions at the moment, Hedieh.
All right, perfect. So let's continue with the story we started with. But now this time, I'm going to tell you the story of me receiving the email, asking, for a review of a financial model. How I would handle this situation is that I will basically call my colleague, somebody who might have some information, and I would try to get some information. In this case, my colleague told me, I asked the colleague, so what is this project all about? Tell me a little bit, the background story. So he would tell me that it's a solar project. So, okay, perfect. I already knew that. It was in the file name, in the email attachment for the financial model. It's a typical project finance model. They they are really at the early development phase. So that's a very important piece of information. They are at early development phase. And so I will ask, did they sign any contract? Did they approach any lenders? And he will say, they only signed a PPA, but we still don't have access to that. And they have not yet approached any banks. So all this information is very useful. So because it's going to tell me the level of flexibility that I want to see in this model. Okay. So I would tell him that, listen, since we don't have any of the project documents, I'm going to apply a kind of a step-by-step approach. First step, I'm just going to do a review of the model mechanic and structure. And at this stage, I'm going to tell you whether we can work with this model, maintain it, of course, do changes, or I will suggest that we rebuild the model from scratch. So this is the decision that will come out of this stage of the review, okay? And then there will be a next stage after that, which I will go deeper into the inputs and define a scenario that I think represents my institution, okay? So I am not yet at the second stage because I don't have enough information. But however, provided the information that I have, I can continue do the mechanical structural review, and that's what we are going to do together today. So let's go to the financial model. This is the financial model that I received by email. So when I see this model, I just, first of all, I want to tell you my idea of a financial model is that I should be able to read it like I read a magazine. Why do I say that? Because look at all the project documents that are circulated, all the contracts, all the project info memos, all the investment appraisal papers. They are so well formatted, and everything is checked. You have a table of content, you have everything well structured, and you have this flow of information, right? That you can see where you can find the information that you want. So the same thing should apply to your financial model. For example, when I see this model, I look at the tabs and immediately I know, I can get an idea of what are each tabs and what they contain, okay? This doesn't mean that, having a multi-tab model or multi-worksheet model or modular model means that it is a good model and that's the way we should do things. No, I have seen and worked with one-pager model, meaning one worksheet with inputs, calculation and outputs all within one single worksheet. And it was a perfect model and it did its job, right? So it's not about, how we design it. It should be a good design, right? It should have a structure, but how you design it is just a matter of preference, okay? So that's why I say a financial model detective should have an open-minded as well, in one sense, that you should not judge everything, at the first sight and have specific rules for design. I mean, it's useless. You need to really pay attention to what are the important things, which is transparency, flexibility, and all the things that we discussed about. So I see that, and then I just come and I check, the cover page. Well, I don't have much information about this project. So as much information I can get, it's good for me. So then I come and I read and I understand maybe from the, disclaimer, who built the model, who are the sponsors. I still, can get some information and I will note, and most probably I will Google them later to understand who were these people who built the model and who are the sponsors. Then I come and I see that there is a guide sheet, a sheet called guide. I like that, because it is basically a sheet that, is like a manual, right? It tells what are the main model mechanics, what are the column design, what are the macros included in this model, the error checks, and it even has, abbreviation. It even has a kind of in form of text and table. It summarizes the key model inputs and outputs. I really like that, because sometimes financial models comes with another document, which is called data sheet or data book. And then maintaining these two is just, too much work. So when you include this assumption book or data book within the financial model, it is sometimes very useful. So that's something that I like, but it's all yet, I cannot judge anything, just I am impressed by this. But I really like the saying by, the quote by Elon Musk that says, if a tool comes with a manual, it's defected. So having a guideline doesn't mean that it's a good model, but I still appreciate the effort that they have put to provide this guideline. It seems that these sheets are what they call preliminary sheets, and it was also mentioned in the guide. So I like that. So these are basically tools that tells us to better maintain the model and better, have better work with this model. There's a tracker sheet, which is most probably to keep track of different model versions, which is a very great tool. So I like it. There is a sheet called Q&A. I really like this idea. I do it myself as well. When I am reviewing someone's model, I always attach a sheet, which I call Q&A, and I keep track of the question and answers within my financial models. And I found this to be a very good practice because first of all, it's easier when you're doing a review of a model instead of typing your answers in words or in the body of an email. You just put it directly inside the financial model, and it's also good for future because you can always go back and check the question and the answers you have received, and you keep track of all of them within this one single worksheet. So I think it's a good idea, and I'm going to use it today when I'm doing the review of the financial model. The second, the last preliminary sheet is called references, which is very interesting. So what it does is that it is linked to inputs, and it tells you the source of where they got the information from. And this is very useful during the review of a financial model, because at this stage, I need to go deep into the inputs and understand exactly where they got each input in the model, whether they're in line with the project documents, whether it's their own assumption. If it is their own assumption, I need to go and do, some benchmarking and understand whether this costs in between, what is the norm, and if not, why. I am not, when you are doing the review of a model, you should never come to conclusion. You should never condemn, before you have enough information, because there is something maybe that you are missing. So you should always keep this attitude of being curious and asking questions. And then there are these input sheets, which it's very normal. I'm sure all of you have seen and have built, like this models, which have constant inputs in a separate sheet in the form of scenarios. So this enables you to define different scenarios and do scenario analysis based on the constant inputs, and it's different one for time-based or time series inputs. So I really like this approach, and I will use it when I am defining a new base case. I will most probably define it in this column L by keeping the original one. I will define my own base case once I get to that stage, but I'm not there yet. So I see most probably these two green sheets are the output sheets. So there is a summary sheet. I quickly go over it. I'm not going to care about the ratios and the returns for now, because I'm not reading the story at this stage. We said, the concept of reading a model like you're reading a magazine. I am not reading the model. I'm just browsing through the pages, So the results doesn't mean anything to me at this stage, because I have no understanding of the inputs. So I like what I see. I think that it's nicely formatted. There are some dynamic charts and all that, which very good. So I like that. And now financial statement. One thing that is very important to me and is a big red flag if it's not in the model is a cash flow waterfall. This is the most important statement in a project finance transaction. And that's why you need to have this cash flow waterfall in your model. So I see that they have a fairly detailed cash flow waterfall, which I need to review in detail later, but I will leave it for now. And then I have a series of calculation sheets, right? So what I like about it, which should be actually, is that they are all harmonized, they all follow the same column structure. The texts are here, the labels are here in column E. In column F, I have all the units that I want. In G is most probably constants. They should all be linked to the input sheet, so it's fine. And then I have a sum column, and I start my forecast going forward, starting with column G. Okay, so, and I see that it is the same structure, the same column structure, the same design throughout all the calculation sheet. So that's good, but still I cannot judge this financial model. I cannot, come to any conclusion at this stage, because this is just my first impression. I see, they have built a number of checks in the model, which is perfect, because it doesn't mean that everything is fine and everything is perfect yet. Just seeing that it's a good relief not to see any red flags, and especially if you have things like your balance sheet is balanced, you have your minimum DSCRs that are satisfied. So all these are good signs, already. If you have a model with a balance sheet that balances, most of the mechanical checks are already checked, most of the links, most probably the links are properly done so that you could have a balance sheet that balances. So these are all good signs. However, I still need to go and do my detailed review. Okay, so if you don't have any question, we can, get into a little bit of mechanical check for the model.
There are some 2 questions, Hedieh, that have come
Sure.
through. If you want, I can read them out loud for you. So the first one is from Brian. Is there any point in having a cash flow waterfall and an accounting cash flow?
Okay, so Brian, yes, of course, accounting cash flow, you can have it, you mean the typical, accounting cash flow, for sure, you can have it, but it's just going to be for, demonstration purpose. Most of your calculations, they should be linked to this cash flow waterfall statement. And all the discussions and negotiation are about this cash flow waterfall. Who is getting what and when? That's exactly what the project finance is all about. And this is all shown in a cash flow waterfall. So I went that far in building even cash flow waterfalls in corporate models. I just think that it's such a great, statement, which really tells the whole story of a project.
Thank you, Hedieh. And the second question from Akachukwu.
Yes.
Is what is the purpose of checks in the model?
Sure, perfect. Yes, so you see that, when you're building the model during the building stage, you need to always think to put some safety guard there in case things go wrong. You want the model to show you that something is wrong, not in the form of a pop-up message, but these kind of flags, that will tell you that you change something in the model, now something is not working. So that's a very good thing. All tools need to have these safety checks, right? So this is exactly safety checks that we put in our model so that we make sure that, things are working properly. And if they are not working properly, there might be a reason behind it that you need to go and then solve it. But, I really recommend that you build as many checks as you can in a financial model to make sure that, the model is like, telling you, because sometimes when you start working with a model, then, you kind of forget, to check, the main things. So having these checks in a one single sheet and summarizing them, as a master error check, which is something that is done and typical in all models, and put it on top of each worksheet in the model. I mean, that's what I usually do, and I put it on top of each worksheet in the model, and of course in the summary sheet, so that the user is aware that, these checks are satisfied.
Great, thank you, Hedieh. And just one final one, and then you can continue, and we can leave everything else to the end. So just again, Brian wants to clarify. He's asking, do we need the accounting cash flow? And then a follow-up question for Kevin, a little bit more general. Why are cash flow statements needed for a company?
So regarding Brian's question, yeah, thanks for the clarification. I mean, it's not needed. If you have a cash flow waterfall and you have the P&L and you have balance sheets on periodic basis, and then you can also summarize it as on annual basis, I mean, then you're good to go. I have never come across, anyone asking me to kind of yeah, I think your question was about corporate finance or project finance. Sorry, maybe Brian, you can clarify. You can even come and speak if you want. But
Hi, Hedieh.
hi.
It's really around the point of having both, right? So the cash flow waterfall, because it has the liquidation hierarchy, is so important. I agree with you, but I really don't see the point of having the cash flow waterfall and the accounting cash flow. I drop the accounting cash flow and rather just only have the cash flow waterfall.
Right, exactly. Yes, we don't need it. We don't need. Some people, they still use it. They got used to it, but in project finance deals, there is no necessity. Once you have a cash flow waterfall, then the cash flow statement is just going to be a summary of what you already have in your cash flow waterfall.
Thanks, Lee.
Rearranged of the cash flow waterfall. All right. Did I answer also any question remaining, Tia, that I didn't answer?
I mean, some comments. Kevin is saying that in India they do use it. Tokolo is also saying depends on the user of the model. If you're going to use the model for purposes of maintaining the model as part of your accounting process, then it would be required. So there's just a little bit of a discussion going on. I'm happy to, yes, hear people's comments on that. And if you want, Hedieh, we can continue with the rest of your presentation. And if there's questions afterwards, we can answer them.
Sure. But the auditors, they don't require, if that's the concern, the financial model auditors in a project finance, they never question that. As long as you have a cash flow waterfall, that should be good for them. So now I want to do some mechanical checks. And I have actually a checklist that I can share with you. I mean, when I don't use it that much anymore, but I started, doing that like 10 years ago when I was reviewing models a lot. Now I build models more than, reviewing other people's models. I had a checklist that I prepared for myself, just to make sure that I cover, all the main topics that are common and typical. So in the first section of the checklist, I have all the mechanical checks, right? So one of the things that are important for me to check is to make sure that there are no hard-coded inputs within calculation sheets, right? You know that this is one of the rules, having no hard-coded inputs within calculation. And there is a good reason for it, because whenever there is a rule, you should always ask why, right? That's just how I work. I always ask why. Why should I do that? And when you understand, again, it goes back to the 4 principles for flexibility, for transparency, and for the ease of model audit. You want to have all your inputs separated within, a specific section of the model. And so that's something that I want to check now. So I use this tool. Most of you are working with some kind of add-ins. I use the generic macro by Professor Edward Butmer. And this tool, I don't know if you have used it a lot. I use it also during the building stage, because it helps me to format, do the formatting the way, we do typically, having a sum column, having a title column, colored differently. The flags, I can also come up with the different color codes for the flags and the coloring the top rows within all worksheets. So it does that for me. So I use it a lot during the building stage. And I also use it during review, because it's going to tell me, the hard-coded inputs that are in the calculation sheet. If you are not using any add-in, of course, you can just press F5, and then it's going to detect all the, and then under special, you go to constants, not text. So it's going to select all the hard-coded inputs here for me. So I'm going to say, so before I do that, because I'm reviewing this model, I'm going to mess up with the formatting. So I just want to save it under another name, right? So that I can do whatever I want without, changing the original model. Okay, so I saved it. Now I'm going to press again F5, and this is going to be for the first sheet, constant, no text. And I see that, so I'm going to color code it. I'm going to say color everything that you have found in red. So I see that there are two inputs here, related to the number of months per pre-operational periods and number of months post-operational periods. So this is an input that should be actually in the constant input sheet, right? So I'm going to just start drafting my question. So the category is hard-coded inputs within calculations. Perfect. And I'm going to provide the reference. So I found it in the timing sheet. So it was these two. And just keep it in a text, here. And the question, so when I want to pose a question, I have a three-step method. So in my step one, I just explain what the problem is. So the problem is hard-coded. We already said it, but it's okay. We can say it again, hard-coded inputs within calculations. Okay. So once I stated the problem, then I'm going to say why I think this is a problem. Okay, this is also important. You cannot just say wrong or you did this wrong, calculations are wrong, errors. It's not nice. You should always, pose either whether, express the problem in form of a question. That's even better. Why did you do that? And then provide, your justification of why you think this is a problem, for the purpose of, in this case, I'm going to say for the purpose of flexibility, transparency, and ease of model audit. Please separate or please import these two inputs in the input sheet. Okay, so this is very clear and you explained yourself very well, because sometimes, you write, you receive, and I have received certainly, questions about the model that is like so open-ended. I mean, you don't know what the problem is, you don't know what they think. You just need to provide instructions of how you want things to be done. It's very important. If not, you're going to go into the circle of back and forth question and answer on a single topic that could have been solved in the first round. Okay, and especially when you're working with model auditors, you should always have this mindset with them. Just tell them that when you are reviewing, please tell me exactly how you want me to do it. Okay, and you do the same thing for others. You tell them exactly how you want them to do things. All right, so I have to repeat that same process for each and every worksheet in the model and try to detect, whether there are any hard-coded inputs. So here it seems that there are none, so perfect. We go into the financing sheet and we repeat the same exact thing for all the sheets within the model, of course. Then I find a line of hard-coded inputs in this row. Shall I just go directly in the Q&A and say, oh, same thing here, you have a whole line of hard-coded inputs and this is wrong? Or shall I just pause and look at this and see what it is? So actually, this seems to be hard-coded because it's an output of a macro. It's just a copy and paste from a macro. And if I really read carefully, even in the guide sheet, they told me that this shade is an output of a macro. So it is justified and I should not worry about it. I should just make sure that the copy and paste and the macros are working properly, and it doesn't take much time for the model to run, which is the most important thing. When I after all these years of reviewing models, when I see a button in a model, I just, I'm scared to just press it, because sometimes it goes to an infinite loop and it just takes so much time. And if you're in a meeting, then this is even worse. So that's something that I would check later for the running time as well. But for now, I am fine with this. So I'm going to repeat this for all the sheet within the model, and I'm going to collect and start, adding to my question if I found any. The other check that I do is for sure that one of the rules, that you should have consistency in your formulas within one row. So meaning that all the formulas which are in different columns within one row should be the same. So if this is the case, then if I copy this whole column across, nothing should change in the model. This is a sign that, all the formulas are consistent within the row. Okay, so I need to do that, if I don't have, any magic, box or any add-in that can do that for me, pick that up for me, I can do this one, I can just, copy this across and check if nothing is changing in the model. So one good thing is that I already have the master error check here. So if you change something, most probably you need to run the macros, right? So that can be an indication. But what I like to also do, I like to bring the equity IRR in, because you know why? Equity IRR is calculated based on the last line in the cash flow waterfall, right? Dividends. So these dividends, they are impacted by all the things that are above. So if any of them changes, the dividends will always change and equity IRR will also change. So that's a good indication. So I'm going to bring it here, and I'm going to bring this equity IRR in front of me so that I see if it is changing. So I'm going to just copy and paste it as hard-coded here. And I'm going to get the difference, which now is 0. And I will see if I copy this column, all of it. I'm going to select the whole thing. And I'm going to Control C, Shift, Control right arrow, Control V. Is anything is changing? No, perfect. IRR didn't change. I don't need to run the macros. So it seems that, all formulas are consistent. I will need to do the same thing for this one as well. I'm going to come and do it. I still, I have my IRR in front of me. All right, we did it, nothing. So perfect, it passed this sheet also passed the test. Then I'm going to do it for the financing, but be careful this time. Why? Because you have this copy paste, these pasted values here. If you copy this column across, then you're also going to copy the copy one, the pasted one. So you will definitely mess up with the macros and you need to rerun the macros. So that will not, be your goal here. Your goal here is check the consistency. So you have to do it in separate parts. Do once here. And then, select the rest and do another one here. So you see, so that's the point that I wanted to show you here, that be careful when you're doing this test. If you have a line, it might not be in front of you. It might be down there somewhere, taxes or, somewhere that they have a line of copy and paste. So make sure that, when you're doing this test, you don't do it on the pasted values. Okay, so I need to repeat that for all the pages within the model, of course, as well, and collect my questions and start adding to the issues list. The next thing that I want to check is I want to check for hidden information, right? Are there any hidden worksheets within this model? So I'm going to come to this and I see that actually there is one hidden worksheet. It seems that it's a duplicate of this one, but I need to understand why this is there. So I'm going to come and put it, in the comments that, please make sure that you remove it in the next iteration of the model if it is not used and not linked. one important thing that I need to check here is on the macros, and so before I go into the macros, I also want to check, name ranges, right? So everywhere that some information is contained, you need to go and check that information. So you have some information in the name manager as well. So there are the range names that are defined in the model. And so you see that there are some errors, there are some link to external sources. So these are the things that it should not be there. So I need to come and also tell them that, guys, please go and, remove these hard-coded, these errors and these links to external files from the model, okay? Then I have to check the macros, right? Macros is important. Why? Because first of all, I need to check if I have access, because sometimes you receive a financial model and then you see that the macros are password protected and you cannot, you cannot edit them and you cannot, review them. And for me, this is a big red flag, which we cannot recover the password, there is no way that we can continue with this model, or we need to rebuild the whole thing, altogether. So that's why, having access to macros is very important factor. When I open this one and I see that actually I do have access and, all the modules are there, I can have a, quick look at them and see that, okay, so this is just the, again, it's a copy and paste macro for doing sensitivity analysis. Then there is a copy and paste for the sources and uses, simple. And then there is another copy and paste for the tracker sheet, some formatting and all that. So it's okay, I can work with that, and this is fine. Then, however, I still didn't test them. I just say that, okay, it's good that I have access to these macro codes. Now I come and I look and I see that there is no sensitivity sheet here, right? So most probably they didn't build in sensitivity analysis in the model. What is your opinion? I'm really curious to know what is your opinion on that. Would you consider this as a red flag and you would say, no, we just, this is impossible and, it's not, you cannot work with this model because it doesn't have sensitivities? Or what is your opinion on that? I don't know, in the chat, or if you want to come up and, say something, please feel free. Sensitivities, sensitivities is it's important, it's a bad sign if a financial model that you receive, it doesn't have any sensitivity analysis built into it. It's not a good sign, because one of the main function of a financial model is to perform sensitivity. Of course, you can, have a base case that should be the most expected case. However, we all know that things go wrong. So one of the main basically aim of a tool, which is the financial model, is to do sensitivity analysis and test, different scenarios. So not having this sensitivity built into it, I don't consider it as a big red flag, to be honest with you, although it is very important to have it, but it's something that I can build in the model myself. It's just a template that I have, and I can come and insert it in the model and, do the appropriate links, and that's it. So it's going to work in that way. So I'm not going to judge this model based on not really having sensitivities. I would really, ask the question of why they didn't put, and if they can include it in the next iteration of the model. But it's not a big red flag. It is something that can be done on top of what we already have here. Okay. So yes, so I will do all this that I told you. I will do all this check, and there are many other checks that maybe we'll not have time to go over, but like checking, of course, for sectoral references. This one didn't have, because when we opened it, we didn't see the pop-up menu as well, and it was not in there. So checks for external links and many other checks that you can go over. So once I do and complete my check, I will come and I would take, all these questions that I prepared. Now I have them all in front of me. So what I would do, I would just copy and paste them in an email, and I will give my judgment to my colleague, first internally. I will just discuss it among my team, and I will tell them I have done the first preliminary review of the financial model. These are the questions I have so far. And my first impression based on reviewing this model at this stage is that this is a model that we can work with. Of course, we need to bring it up to our standards, but we can work with it going forward. So that's going to be my analysis and my first review of the financial model. Of course, this next step, as soon as I finish with this step, then the next step is to go and read all the project documents, all the contracts. And while I am doing the review of those project documents, I come and cross-check everything with the input sheet and with the calculation sheets, So that's another, different topic, which really, but, just as I told you, it's an ongoing, the review of a financial model is a never ending because projects are dynamic. Things changes, there will be additions to it. So it's an ongoing thing that you need to come and check things in the financial model. So I hope you, got, a couple of hints and tricks during this storytelling session with you. And I think we can leave the last 10 minutes for question and answer. So please feel free to ask me any question you may have.
Thank you, Hedieh. I have seen one question coming through from Bright, who's asking, shouldn't you run macro for every change to know if the formula consistency test is working?
Let me read it. I didn't really get the question. Shouldn't you run the macro for every change to know if the formula consistency test is working? Well, I mean, in the example that I show you, we saw that the macros were all, there is a check in the, actually in the check, there is a check that, for the macros. So we already have it built in the master error check. So if we needed to run the macro, we would have known it from this macro check, which was on the top of the worksheet. It was telling us something is wrong, please, change. So for example, let me do a demo here for you. For example, if I come and I just, change the this cost item, then you see that the macro fails. And actually, this is very good that you ask this question, because this is definitely one of the tests that we need to do. And it's, doing sensitivity test is important when during the mechanical check, because you want to increase your capex, and that from logic, when you increase capex, equity will go up, debt will go up, so you expect equity IRR to go down, and you expect the debt metrics to go down as well. If you do that, you increase your capex and you see IRR improving, something is wrong, right? So sensitivities in that sense during the mechanical check is very important. So yes, you see, like, for example, I changed that input. I am running the macro. It was fine in terms of running time. And then the checks are also all okay. So doing that change, was okay in terms of, but I can check, if you remember, it was 16% or IRR. So it went down to 14.4%. So I think, the model in that term, it's working properly. So for sure, this is also one of the tests. Thanks for the question. It helped me to clarify another point as well.
I'm not sure if you can currently see the other questions in the chat, Hedieh. There's
Sure.
more that have now come through.
Yes. So.
Yep.
Perfect. Yes. So I see that somebody answered on the question for the sensitivity that can easily be included. Perfect. Exactly. And sending it back to have specific sensitivities that we want is also perfect. Yes, exactly. When you're asking, you need to be very specific and tell exactly what you want. Perfect. Then I have a question from Brian. I think it's coming still from the previous one. I think it's just a discussion. I don't know. Brian, you can step up if there is anything that needs to be clarified. Okay. How long do you typically budget yourself for a PF model audit? From Nate. Well, in terms of timing, for the model audit, as I told you, I do it in stages, right? So this first stage is the mechanical check, and depending on the complexity of the model, I mean, it's not, like every project is specific, has its specific things. So it's not really one single rule that I can tell you exactly how many days it takes. So yeah, I do this first step. I always tell that, I do things in stages, because also when you receive like 200 questions at once, or you send 200 questions at once, it's just not right, I would say. It's much better when you are sending your question, do it in phases, just say, first, we're going to tackle the mechanical issues. Once we are done with that, we're going to check the inputs. Once we are done, so this way you have, different patches of questions. If there are not many, then of course you can send them in one go. But if you have many questions, it's much better if you just, put it, do your analysis in phases, and, and also have conference call for sure to clarify, the questions and your answers. So who was saying it was somebody was asking for the model, Alex. Yes, so you want to see if we can I can share it. It's just a typical, I think it was a solar 10 megawatt solar project. It's not a very detailed model, this one, because as I told you, this was an example of a pre-feasibility stage. So it's not very complex. It doesn't contain much technical details or anything that can be helpful to you. Very simple model. It has two tranches of, no, it even has only one tranche of that. So you see, that's also another comment that I would say. I mean, when you need at least two tranches of debt in your financial model, because even if you have, two lenders, you say that I'm going to blend them in one and put only one tranche. I mean, first of all, when it comes to monitoring stage, post-construction or during construction, that lenders are monitoring things and they want to know exactly, how much was paid under that fee and how much was paid under interest, then you need to separate these different tranches anyways, at stump stage. So why not do it at the beginning stage? So if you see that, that's something also that you can note and comment on and ask for at least two tranches of debt in the financial model. For sensitivities, Jeremy, I do have a template. I can, it's on my Eloquence channel. I have one with a VBA, with a copy and paste, and another one with data table. So you can go and download them on my Eloquence channel. All right, so please, if you have any other questions, so let me know. You can also contact me and Tia after, and I'm sure we're happy to answer any questions that you couldn't answer during the session.
Thank you, Hedieh. This was really great. And it's exactly time now just to wrap up. Thank you guys for your questions and for joining us today. We wish you a good day, evening, morning, wherever you are in the world. This session will be published on the platform within the next 24 to 48 hours for all of our community members. So you guys will be able to refer back to it. And yes, any materials, Hedieh, that you can share with us, we will be adding them under the video as well. So yeah, thanks guys very much for joining, and we will see you next time.
Thank you so much, Tia. Thanks, everyone.
Thanks, guys. Have a nice day. Bye-bye.
Bye.
Thank you.